Say you're like me, a fairly frugal guy that's trying to save for financial independence. On a normal day, you're probably saving as much as possible. One day, you find a $100 note on the street and you go like, great! I'm gonna use this to spend on that fancy running shoes that I just saw, which I really liked. Now this might sound like a pretty normal decision that most of us would make. But what just happened is really an example of how mental accounting works. Because on a normal day, I might have not spent that $100 on a pair of running shoes. But then, because I found that money, in my brain, I treated it as fun money and therefore I should spend it on something fun. Now that's just really a cute example. But in today's video, I'll be walking you through what mental accounting really is and how it potentially affects our spending as well as our investing in a negative way. And of course, I'll round up with some practical tips of how we can protect ourselves a little bit better. Hey guys, it's Sunmin and welcome back to Your Money Game, the show where we'll get better with saving, spending, and investing. So, the essence of mental accounting is really when we apply some kind of subjective reasoning to how we make our financial decisions. Let's take that $100. So, imagine if you found that, or maybe your boss said, hey, good job, and here's a token of appreciation. Objectively, that's just $100. But our brain gets really creative in manufacturing or creating these buckets that tell ourselves that, hey, this is where I got the money from, therefore I'm going to classify this money differently. And depending on the type of buckets or the type of scenarios, the way we interpret and use that $100 will change. The concept of mental accounting was introduced by this guy called Richard Thaler back in the 80s. He's an economist and Nobel laureate that's involved in a bigger field called behavioral economics. In his famous experiment, he presents two scenarios to a group of students. In scenario 1, imagine you went to the cinema to watch a movie. You've already bought the ticket, it cost you $10, and when you got there, you realize that, oh crap, you lost the ticket, it's not numbered, and you can't get a refund or some kind of replacement. The question is, what would you do? Would you buy another $10 ticket? I'll give you a couple of seconds to think of that answer. If you answered no, 46% of the people undergoing that experiment said no as well. He then continues with the second scenario. Say you were going to the cinema to watch the same movie, but this time around, you didn't buy a ticket ahead of time. So when you got there, you open up your wallet or your purse, and then you realize you lost $10. What would you do then? Would you still go ahead and buy the $10 ticket? Guess what? 88% of people said they would buy another ticket. So in scenario 1, you would have lost $10 through the ticket. And in scenario 2, you would have literally lost $10. But both of them are the same value. But however, our brain does this weird thing that creates new buckets and therefore changes our decisions itself. So, Sunmin, stop nerding out, man. Why does it matter? Okay, let's look into a couple of examples of how this impacts our spending in a negative way. A common example is when we receive money in some new way. Whether it's some bonus, an extra commission, you found the money, or maybe it's just that cashback that you got from your credit card. And our brain classifies it as fun money and then we don't use it for our original financial goals. Instead, we just want to spend it and have fun. Another common scenario is when we're given an option for an installment plan for our larger purchases. These include big things like TV, furniture, cars, even houses. Because it's presented to us as a monthly fee, our brain starts to rejig from the total cost towards a monthly cost instead. And as a result, and I'm sure some of you might have done this before, you stretch the actual limit of what you would have bought. But in real terms, it's actually more than you would have intended to spend. Just remember that it's not the spending itself that's bad. It's the auto bucketing that we do in our heads that might result in us spending a little bit more than we intended and not sticking to the good financial habits you might have built. So this weird mental insanity can also impact us negatively in investing. So here's a personal example that just happened to me. So I had a pretty good 2020 in terms of my investment returns. And because of that, there was a portion of that returns that I kind of thought to myself that, hey, I've got some money which I could maybe make a more aggressive trade. Now this is not what I normally do. But because of that weird mental accounting that I just did, I decided to make an aggressive trade which didn't really go so well. Now the bad part isn't that I lost money, although that sucks. But what's really bad is that I broke my own rules thanks to, again, weird mental accounting stuff that I somehow persuaded myself that because of my good 2020 returns, I had some money that I can afford to lose. But I'm hoping that you could afford to take a little bit of time to hit that like button, because that tells the gods of YouTube that this video is worth sharing to more people. It's impossible to monitor ourselves 24/7, but nevertheless, here are a few practical ways that we can protect ourselves from all these bad mental accounting forces. First is to establish some kind of norms in the type of things that you spend on. If you don't do it already, you should consider tracking your spends, if anything, to just get a norm baseline of what you tend to spend in certain things. And once your patterns are a little clearer, you'll be more alert to the situations that tempt you to spend more than you normally would, or different scenarios where you start to play mental games to give yourself excuses to spend. Tip number 2 is to have defined goals and plans for all your money, including any money that you might have gotten unexpectedly. Examples could be you building an emergency fund, maybe using it to automatically pay off any debt you have, or maybe even automatically investing. And speaking of plans, the third tip is to make sure that any investments or trades that you make have a plan. I'm lucky in the sense that my portfolio is usually built for the long term, so anything that I add in there tends to sit in there for a very long time. In the few instances where I make shorter term trades, like the one I mentioned earlier, I always have a predefined entry and exit. I have to say, trust me on this, from my personal experience, there is nothing worse than being in a trade that's going against you and you not having a plan or any idea how to get out of it. Next is to always be wary of marketing tricks that try and rationalize costs to you. Now, I come from this industry and I'm familiar with the tactics, and even I'm not immune. You see this commonly used in any kind of service that tells you it's a monthly subscription fee from only X amount, or you see it in installment plans like I mentioned earlier. And the most common one is that the industry always tells you that it's a special occasion and therefore you should go spend a little bit more than you normally would. Valentine's Day? Great! Spend $100 on a meal. Fantastic! And finally, it is training yourself over time to think about all money as equal, no matter where it comes from. It's important for us to try and treat money as objectively and as rationally and as consistently as possible. Money from a job? It's just money. Money from bonus, commission, cashback, incentive, tips, whatever. It's not fun money. It's just money. Treat it like you would treat all your other money, and the more you do that, you'll be okay. So, what about you guys? Have you done any mental gymnastics that rationalize a weird purchase or some kind of investment? Let me know in the comments below. So that's it. Thanks for watching, guys. I really hope you got some value out of this, and if you did, I would really appreciate your support as always in clicking that like, subscribe, as well as that bell button, because I'll be back again next Sunday with a brand new video. And until then, you take care and keep playing your own game.